Many investors fall into a deep hole by taking unnecessary risk. Why does this happen constantly? Financial expert Mr. Ramalingam will elaborate on this now.
When you are losing money, I have seen people coming to me and telling me, Ramalingam, I have got a portfolio of 50 lakhs. Why don't we invest at least some 1 lakh in some poor performing or which has got a potential to perform investment? There seems to be a huge risk. The people tell me like they don't understand the risks involved in Bitcoin, or they don't understand the risk involved in like options trading, but they want to explore that. They tell me, I got 1 lakh, I got a 50 lakhs portfolio. This 1 lakh, I want to take risk. If it rewards me, that's fine. If it becomes zero, I'm also fine with that. Why don't we take that risk? I appreciate their willingness to take risk and their risk appetite, though I appreciate it. But one thing what I want them to understand is when you are losing your principal of 1 lakh, even it can be 5% of your overall portfolio or it can be 1% of your portfolio. But what you are losing is not just that 1%. What you are losing is not just that 1 lakh. What you are actually losing is also the future compounding of it. 1 lakh, what you are losing, you are also losing the future compounding of it. And 1 lakh investor over a period of 27 years in a very average large cap fund has given a return of 1.5 crores. 1 lakh investor 27 years back has become 1.5 crores in an average regulated mutual fund scheme. Very simple. I'm giving you mutual fund as an example. It can be any other investment also. Just because mutual fund is so common, I'm using mutual fund as an example. So what we are losing is the future compounding of it. It looks like today, okay, I'm okay to take a risk to the extent of 1 lakh. But when you are taking blind, undue risk of 1 lakh and when you lose it, you are losing the future compounding of it. Because of that, you are losing the probability to have a gain of 1.5 crores wealth in your portfolio. You are creating a halt to your wealth creation process. This blind risk taking mindset blocks, stops your wealth creation process. So that is why we say don't lose money. When you lose money, you are not only losing your future, not losing just your savings, you are losing your future compounding effect and you are creating a hindrance to your wealth creating process. Even if you could have left it in an average fund, it could have created wealth. Because you wanted to do something exciting, you are looking for an extraordinary return. You want to outbeat others in the game. You want to get rich quickly. Because of that, I'm creating a hindrance to my wealth creation process because I want to get rich quickly. In the process, future compounding is getting affected. Now, you look at the same quote now. Never lose money. Don't forget rule number 1. So, what is this quote? When we dive deeper into the same cliched boring quote, when you are investing in a volatile loss-making investment, make sure you have got a strong conviction that this will recover and it can compensate you with adequate returns. Number 1. Number 2, if you are taking a blind risk and losing money, you are losing the future compounding of it. It is a hindrance to the wealth creating process. This is what it actually means.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.